we're going to pitch Oracle versus Microsoft. We just talked about Oracle. They shocked Wall Street with their earnings and their entire order book. They had a lot of AI cloud contracts. But can it actually take on one of the biggest players in the AI ecosystem right now, which is Microsoft? And I first want to look at Oracle. Let's see where they are. Here we go, Oracle. Let's load them up. Now, Oracle is not a new kid on the block, but when it comes to the AI race, they absolutely are. They have a lot of legacy business in their in data centers for corporations and for other businesses, and they currently increase their cloud division, and that's where most of the AI hype comes from. They're still relatively small. They're valued at about 800 billion, which is massive. But Microsoft, I think, is around 4 billion or 4 trillion, excuse me, which is significantly bigger, almost about more than 4 times bigger than Oracle is. So that's massive. And Microsoft has a huge moat. Everybody knows their ecosystem. Everybody is using it. It's very hard to compete. And I think Microsoft is one of the biggest winners of the AI race as well. But we want to look at it from a more fundamental perspective. What is the better business to buy right now, and why? Can we find an explanation for that? And we do that by using our software. This allows us to get all relevant stock market data at the click of a button and see and analyze whether or not this is a company that we want to own for the long term and where we want to put our money to work, yes or no. Okay. Oracle, again, same 3 questions. Can we buy a great business for a great price, and can we reliably predict it for the future? Let's start off with with what we see here. I want to look at the price first. Over the last 5 years, they've grown 380%. That would not be a bad investment. Last year, also about 100%, but a lot of the uptick is in the last few days. And if we look at their revenue growth, for the last 5 years, it's about 10%. Last year, about 8%. And only current quarter have they shown a significant deviation from the trend by peaking upwards in revenue growth quite significantly. And expectation is that they continue to grow their revenue by more than what they expected before because of their huge order book in the AI cloud ecosystem. If we look at our free cash flow growth, it is negative. They have shown a decrease. So we'll be taking a closer look at that later on. The return on invested capital, it's okay. It's not great. Roughly 10% on average. Their liquidity position, it's okay. Also not great. And they did hand out more shares than they bought back. Let's look at their recent operating margins. These are actually quite good. I would expect this from a cloud-based business, from a software, not entirely software, more an infrastructure, AI cloud infrastructure business. You would expect high margins. High margins are good. They have about a 70% gross margin, 30% operating margin, and let's round it up, 22% net margin. And that means that 22% from every dollar they make, they get to keep. And with that, they get to reinvest it in the business, pay off some debt, buy back shares, hand out a dividend, or do mergers and acquisitions. So they have a great margin business that positions them well for the future. Of that cash they keep, they reinvest it at an almost 11% rate of return, which is the most recent number. That's relatively good. It's better than the market average. I always aim at 50% for my own investments, so it's still below that, but it's not too bad. And we would expect this to grow in the near future because of their huge AI order book. And the biggest question is whether or not they can keep up that order book and keep filling the order book. So from a business perspective, I think that we can qualify this as a great business. If we look at a price perspective, let's use our price calculation tool. They've shown about 11% revenue growth. Let's say their whole AI play pays off massively and they manage to grow it above expectations and above what they have historically done, which could be the case. Everybody is investing in AI and Oracle could be a big winner of that. So let's say they reach 15% revenue growth over the next 10 years. Let's say for the normal case, they equal what they did. And for the worst case, they underperform slightly. Now, if they manage to grow 15%, I'm willing to pay willing to pay more. But how much? Let's put it at 20. 15 for the normal case and just 10 for the worst case scenario. Now I aim at a 15% rate of return. It's also overpriced. I think with a huge uptick, I would still agree with this. And the reason why is because we get to the third question. Can we reliably predict it for the future? They have shown a great order book uptick, but can they manage to actually deliver on all those orders? And can they manage to get more orders in their order book? If the economy were to slow down, which could happen, we can never predict when it happens. We only know that it will happen at some point. Will these orders still come through, or will these just be cancelled out? I think that's quite a risk you're taking on. Their legacy business is still doing great, but you're overpaying for their legacy business. And you might think that could be a great investment if you believe in a growth story. I think they can grow, let's say 20%, and you would be willing to pay 25 for that. Their normal case, they still outperform, and this would be about 10. Let's see what it does with the valuation. It's still overpriced. So I think it's not a great, let's say it's a great business. You can't buy it for a great price, and it's not that easy to reliably predict for the future. So in my book, it's not the best investment. Now I'm going to compare this to Microsoft, which is the incumbent. They are the biggest player on the block. They've grown massively, and I think that they're one of the biggest winners when it comes to AI. They have OpenAI. They have their own software suite, and they can supercharge it with all their AI tools. They have a lot of cloud services. They are everywhere. They're really everywhere. They have the software, they have the hardware, and they have the infrastructure. And they have a great business model. They have all the subscriptions. So from a business perspective, I'm already inclined to say this is a great business. But let's see if that's true. Let's look at the revenue growth. We see upwards going graph quite steadily, and they're still growing about 15% year on year. Great. Free cash flow growth. Last year it dipped, probably due to high investments or capital expenditure in their AI expansion and the growth of Azure. So it hasn't grown, but they can put it to use. And you see that by the return on invested capital, which is close to 15%. Their liquidity rate is still very high, well above 1. That's what you want to see. If it's above 1, it means they have more cash than they have debt. And they buy back some of their shares. Now, if we look at our latest return on invested capital number, this is 22%, which is significantly above what I aim to make in the stock market. So that's already great. That's what we want to see. If we look at a margin perspective, they make higher margins than Oracle. They have a 36% net margins to Oracle's 22, I believe, on the top of my head. So they get to keep more from every dollar they sell, and they invest it at a higher rate of return compared to Oracle as well, even compared to me. So that's quite... these are the signs of a great business. So is Microsoft a great business? Yes. Now, can we buy it for a great price? First off, if we look at our valuations, they're quite highly valuated. 36 times earnings, almost 4 trillion market cap. It's still insane. Price to free cash flow is even higher. They pay a small dividend. And I think I would be willing to pay a higher price for Microsoft compared to Oracle. Why? Because they already have a bigger market cap, so there is a higher moat. They show better growth numbers. Now Oracle has a better perspective. Microsoft is already huge, so it's a lot harder to grow from a perspective where you're already huge, whereas Oracle has a lot more runway to grow. But if you look at the data, Microsoft is the better growing stock if you look back a few years. From a free cash flow growth perspective, they've done great. I think it recently declined because of more investment, more capital expenditure in AI. And they invest their cash at a great return. Absolutely great business. We would be willing to pay a higher multiple for this. So let's put it into our valuation tool. If we look at revenue growth, that's best case scenario. I think this is quite a stable business. There won't be huge deviations. So let's keep all our revenue growth percentages quite close together. For 15% growth, I'm not willing to pay 36, but I would be willing to pay for Microsoft 30 might be a little excessive. I would be willing to pay 25, and then 20 and 15. Now, these are quite conservative, and it shows that it's currently overpriced, and I would relatively agree with it. I would maybe call it fair value, but definitely not undervalued. Microsoft is a stock that I keep a close eye on. I think it's a great business, but currently I can't buy it for a great price. Can we reliably predict it for the future? I think so. I don't see them going anywhere. Their product suite is really strong. They have a strong moat. It's really hard to outcompete them. And when we talk about a moat, the way I look at it is if a competitor would arrive on the scene with an amount of cash equal to the market cap of Microsoft, so 4 trillion, which is very unlikely, but in this theoretical scenario, let's say this happens, can they instantly compete with Microsoft? I think there's no chance in hell that can happen, for the very simple fact that Microsoft is already everywhere. Everybody is used to working with Microsoft. They have a huge suite of tools, products, software. It's really hard to outcompete them. So they have a really strong moat. They have a lot of opportunities for growth. They own part of OpenAI. So from a reliability perspective, I don't see them going anywhere. I see them growing very well, very happily, very steadily into the future. I just think they're overpriced. So for me, great stock to look out for. Better investment currently, if you look at the fundamentals, than Oracle, but overvalued. So let's put it on our watch list, or it is already on our watch list, but let's put it there at a different price. Maybe, I think it needs to significantly decrease. So let's put it there at 400. If it ever hits 400, then I'll be interested. But that's going to take quite some time. There's quite a big gap between what it currently is and what I'm willing to pay. So I could be waiting a long time. But I'll keep an eye on it, and you never know what happens. If tomorrow something strange happens, the price could drop. We've seen greater drops in worse market conditions. I think the market is currently at an extreme peak, and therefore there is a lot of room for stocks to decrease in value. And that's when I'll be ready to strike.